Tendai Rukawa is the lead auditor within the risk department at Motor Insurers Bureau. Additionally, she serves on the board of directors for University of Northampton with a focus on the Audit and Risk Committee. She is a member of the Women in Enterprise organization and was a nominee for the 2025 Milton Keynes Women Leaders Awards. As an impact speaker, she brings unique perspectives and practical strategies for helping professionals gain confidence to be visible and embrace vibrance in their corporate life. Nyasha Tsuro. Nyasha is a partner at BDO UK, where he leads the Audit Centers of Excellence, delivering specialist support to audit teams to enhance audit quality, improve efficiency, and embed digital audit techniques. He joined BDO in 2022 from KPMG UK, bringing extensive experience in audit quality, transformation initiatives, and the innovative use of technology in audit. Nyasha began his career with KPMG Zimbabwe and is a member of ICAZ and ICAZ. Kosin is a digital assets and cryptocurrency manager at HT Digital, based in London. He leads assurance engagements across the digital asset sector and is deeply experienced in the audit of blockchain-based businesses, with a focus on the practical application of crypto accounting frameworks. Kwas began his career at PwC London, where he trained and qualified as a chartered accountant, ICAZ. During his time at PwC, he worked on clients across a range of industries, both publicly listed and privately owned, developing a strong grounding in financial reporting, audit methodology, and regulatory compliance. He has since applied that experience to the fast-moving world of crypto at HT Digital, where he focuses exclusively on the digital assets sector. Kwas has worked with a wide range of crypto clients, including crypto exchanges, stablecoin issuers, Bitcoin miners, and many other Web3 businesses. His experience navigating the unique risks and complexities of crypto-native operations positions him as a trusted advisor in the evolving Web3 and digital asset space. Kwas is passionate about strengthening assurance standards in the crypto industry and promoting greater trust through high-quality audit practices. Alex is an associate director at Ipsos, one of the largest market research companies in the world. Based in London, Alex works mainly with clients from financial and professional services, advising on how reputation can be built, retained, and enhanced. Earlier this year, Alex worked in partnership with chartered accountants worldwide to survey chartered accountants globally and understand current levels of AI adoption in the chartered accountancy profession, and how this can be increased through investment, training, and education to help understand the future of the profession.
Good morning, everyone. Sorry. Can I tell you, every fiber of my body is fighting me saying, yellow, yellow, guys. I will say ICAZ does not endorse any socialites. It's just in reference to my beautiful yellow outfit. Once again, good morning. I hope you've all had, your cup of coffee, cup of tea, your water, that 0.001% British of me. Or if you're trying to be alternative, you've got your kombucha, Red Bull, shots. I don't know what's in those flasks. We listen and we don't judge, okay? Yes. Greetings, everyone. And once again, I would like to say welcome to one of the most forward-looking conversations we're going to have at this session. My name is Tendai Rukawa Matsika, and as my dear sister mentioned, I am a fellow chartered accountant, registered with ICAZ and with ICAEW. I am also a board member at a competitor university to this one, and I am a speaker. I did promise the organizers that I will go through this session without making not one penguin joke, because I am known as the penguin speaker. But today is not about me. It's about a conversation that is not only timely, it is vital. We're going to be talking about accountancy in the future decade. Yesterday, we were being told the global landscape is evolving technologically, environmentally, economically, socially. And with that, the role we play in that landscape is also evolving. So once we were viewed from a lens of just being stewards of financial resources, more and more of us are being demanded to bring strategic insights, demonstrate ethical leadership, and show sustainable value. So to sort of debunk all these things, I've got an amazing panel. They have expertise ranging from audit, corporate research, and regulatory insight. So some of the questions you may have that we're hoping to tackle in the next hour may be, what does trust look like in a world that is full of skepticism and misinformation? How can we as chartered accountants respond to that growing demand for that responsible, credible ESG assurance? And we were hearing so many words yesterday, EI, disruption. How does this change our tools? But also, how does this change the role we play in the accounting environment? And crucially, what does it mean for the talent that wants to enter into this profession? I did say at the start, it's a conversation. So we're not just going to be talking at you. We're going to invite you to also let us know where your mind is. So to kickstart, I would like us to just go through one Slido question. In case you did not know, a speaker's nightmare is that the technology does not work. I am hoping today it's a beautiful dream and not a nightmare. I would just like to get a pulse of where your mind is before we even get into the session. One Slido question, if we can put it up. The first question, I would just want to find out from you. In your view, which factor most influences public trust in the accounting profession today? In your view, which factor do you think affects the public trust in accounting today? These are anonymous, there is no right or wrong answer. What do you feel is shaping how we are perceived by the public today? Scan the QR code and let us know. In my mind, I was hoping no one would choose number 4, but yeah, it's featuring there. None. Trust is in decline regardless. That is interesting. We will close the poll at this moment. So, I will now take this chance to have a conversation with Alex in light of what has also come through. Alex, Ipsos carried out a research on behalf of chartered accountants worldwide. And you know, I had to bring you a copy just to let you know I did pause my June book club to make sure I went through this report. And it's quite interesting because as a chartered accountant, you have your views. But when you get to see how other chartered accountants think, can you let me know some of the key insights that came through from this research that you did?
Yes, yeah, that's working. Thank you, Tendai, and good morning, everyone. Just to preface this, I'm not an accountant. I don't have an accountancy background. As Tendai said, CAW hired Ipsos in September last year to do some research with accountants through kind of the country industry bodies that make up CAW. ICAZ was one of them. So some of you may well have actually taken the survey. And we were trying to explore where does AI fit into accountancy in the future, and how can CAW and then member organizations like ICAZ kind of help to increase AI adoption. And it was a really interesting project, and we came up with some very interesting findings. The first one is that across the board, from junior level up to kind of C-suite, there's a very strong willingness to adopt AI. It was 85% of respondents, and we interviewed about 2,500 people. 85% said they were very willing or fairly willing to adopt AI. skewed slightly towards the younger generation. I think that's just a product of the younger generation being more kind of in tune with technology and maybe using it in their own lives more than maybe kind of the senior level people. But a second finding from that was that there's a massive skills gap, and that is a barrier to adoption. So one of the big things that came out of the report was that it's training and kind of upskilling is a key way to increase AI usage in accountancy. And from that, we were asking people in the survey who they think they should get the training from, whether it should be their company, so the employer giving them that, or their membership organisation. And it was overwhelmingly an expectation, particularly among the younger generation, but across the board really, that it's organisations like ICAZ that need to provide that training to upskill accountants to use it. And then from that, one of the findings was that accountants in general don't see it as a threat. That we heard this in the introduction that you were told about yesterday. It's more of a complement to accountancy, that it will make your jobs more efficient, more enjoyable, more strategic. So they were the key findings that kind of came out of the research.
Pretty interesting. I think something you touched on was the idea that there is the willingness to use AI, but somehow, even when you're having conversations in the rooms, a lot of people feel unprepared. What do you seem to be sort of the key barriers that the respondents were highlighting to you as that, recognizing that there's a gap? What highlights were coming through?
So I think there were two reasons that kind of came through that is the barrier to adoption. The first one is the skills gap that I mentioned, and the kind of the expectation that organisations, the accountancy bodies rather than employers should provide that training. And the second one was strongly focused on data security. So there was a real kind of concern, and this actually interestingly skewed more towards the senior level respondents rather than kind of junior. There was a concern that data security was the threat, and that was preventing the kind of decision makers within organizations to embrace AI and kind of bring it on. Because obviously clients and customers, it's their data that would be put into the AI kind of systems that are being used within the organizations. And so it was really, the skills gap was the key one, but then once there is skills, how do you securely use customer data and not be a threat?
Okay. That's pretty interesting, because I do sit on a couple of boards, and data security seems to be that number one concern that comes through. And speaking of our members, a lot of people think AI is coming to replace. We had a session yesterday where words like redundancy and extinction kept being thrown around. How do you see AI as elevating the CA role as opposed to replacing it?
Yeah, so as I said, the general consensus from the research was that it's not going to replace, it's more going to enhance, if anything. It will allow more kind of interesting strategic work to take place while the AI systems do the kind of data entry, data analysis elements. And also I think we've seen in the last couple of weeks, there was a general report by MIT that most companies that have adopted AI, it's not actually giving them the benefits they expected yet. So it might not be as far along as kind of a year or two ago we thought that it could kind of take those jobs. But as I said, the general consensus within the global view of the accountants that took our survey was that it would be a benefit and would make their job more interesting, and they didn't feel that there was a big threat. And I think that's true across sectors. It's not just accountancy. I think you see it in law, you see it in my job. It's really freed up time to, focus on the things that need strategic thinking and intelligence, and all the training that for accountants go through. Giving the client or the customer the value, and so AI is really going to kind of help that, I think, and I don't think it's a threat to the job, and it will make it more interesting.
I hope that gives hope to many people. We are only going to speak of extinction for dinosaurs, not for chartered accountants. Yes. Now to another buzzword that was being thrown around, ESG. The future accountant has to contend with what it means to incorporate ESG in their daily working and in their audit and assurance, sustainability assurance. We're going to do again another quick poll so we just get a pulse of where your thoughts are. If we can have the second poll question, what's the biggest challenge your organization faces in preparing for ESG and sustainability assurance? What's the biggest challenge your organization faces in preparing for ESG or sustainability assurance? I know we're saying your organization loosely put. Sometimes we are auditors. What are your clients facing as the biggest challenge to ESG and sustainability assurance? Honestly, answer what you see seems to work. Maybe you've heard it being discussed in networks. What seems to be the challenge? Ooh, the top two seem to be vying for the top position. Unclear expectations, lack of data, quality data. I think 1 and 2 seem to be contending. Unclear standards and lack of quality data. Now I'd like to speak to Nyasha. Even just seeing the results that are coming from the poll, and as we can see that sustainability at one point was discussed as an emerging future thing, right now it is at the center of corporate reporting. What challenges as firms like BDO are you seeing that seem to be coming through in the implementation, particularly when it comes to aligning that financial and non-financial data?
Thanks, Tendai. You're right. ESG is a buzzword at the moment, and it's creating a lot of issues, challenges that we in the profession have to navigate. And it's interesting to see the results of the polls there. In the introduction, it was mentioned that yesterday there was talk about so many different standards. So there are so many standards, so many frameworks. It is a challenge in terms of being up to speed with what are those regulatory requirements, with so many different standards and hard to drive consistency. And there's so many regulations, that entities are facing, EU regulations, required disclosures, and navigating that landscape at the moment without a clear, defined, consistent standard which entities can follow is a challenge. And we are pleased and excited, with the coming of ISA 5000. This is effective for audit periods ending on or after 15 December 2026. And this would definitely provide that clarity in terms of really how can entities really meet the requirements and at the same time assurance providers to ensure there is a consistent methodology that can be applied to ensure comparability between entities within the same sector industries. So that's one of the challenges, that issue around so many different standards, so many frameworks. If you compare with financial reporting, there's IFRS, there's GAAP, so there's that clarity. If you go into sustainability, ESG reporting at the moment, without that consistent clarity, it does create a challenge for firms. So that's one of the challenges that we are facing. The second one that we see, and again, interesting coming out of the poll as well, data quality and access to data. If you compare financial information, there's a trail for it. There's that clarity in terms of how transactions are recorded, generated, and processed. But when it comes to non-financial information, a lot of it doesn't have that rigor that financial information goes through. So information, at times it's manually recorded. It's recorded outside of the finance department. It's operational information. And the quality of that information at times is such that you're not able to give that assurance. So there are concerns around, or there are challenges around how complete and accurate is that information? How accurate and reliable is that information? And what that does, it also creates a challenge in terms of the stakeholders' expectations. Stakeholders, regulators, investors, public interest, they want accurate reporting. But if there isn't an audit trail for that information, or if the data quality is not good, then we are not in a position to be able to provide a reasonable assurance, and you end up in a situation where you're providing limited assurance. So that in itself does create a challenge. And then if you think about the link to financial reporting, how does that link? How do you link climate risks to financial reporting? In some cases, it can be a challenge. There are some instances where it is a bit easier and more straightforward. Say, for example, when you talk about impairment of assets, or it could be maybe a local bank which is providing, mortgages to properties maybe in an area that is risk of flooding, or there are some climate risk issues. So you can see the link there. But when you expand it further, when you look at things like maybe supply chain information or diversity matrix, how do you link that to financial information? How do you link that to financial reporting? So those are some of the challenges. How does maybe diversity matrix impact maybe projected future cash flows? How does that impact the entity's revenue in future periods? So there is that challenge in terms of, okay, how can that information then link in to understanding and having that impact with financial reporting? And then the other point is around skills gap. We are trained accountants, so our profession, our training, when we went to university, we were trained in accounting. So now we've got a situation where we expect our teams, we expect our assurance teams to also have knowledge around ESG matters. So there is a skills gap. So again, there is an element of bringing in people with relevant skills and expertise, building multidisciplinary teams, that are able to provide that knowledge and information within a team structure.
Pretty interesting. Without sounding like I was cyber stalking you, Nyasha, I did find out that you coach your son's football team. And even in my fashionista self, I am fully aware you need to prepare for the next season. You need to make sure everyone is fit for what's coming in the new season. So right now, so many accountants are thinking there's AI, there's ESG, all these changing investor demands. How would you advise firms to prepare their talent for this new era, this new reality of accounting?
Okay. Well, from a talent perspective, similar to what Alex was saying, there is an element of upskilling. We need to make sure we upskill our teams, we upskill our people. We talk about these standards that are evolving, that are ever-changing. We need to make sure we invest in teaching and learning and development to make sure our teams are fully up to speed. Then the second part is around in terms of we have to hire beyond accountants. When I joined KPMG in Harare to start my articles, we didn't have any IT auditors. Within a short space of time, we had IT auditors coming in, and then before you know it, there was an IT audit department. So, and why was that? It's because at that point, IT was becoming so integral. So it's important that we have the relevant skills and expertise within our teams. And I think that's the direction that's happening right now with ESG. We're going to make sure, we're not just hiring accountants. We need to hire people with the relevant knowledge and experience. We need the right people in the teams. We need the right people in the room. So climate experts, data analysts, data scientists, people that, you talk about engineers, you need to make sure we're bringing in those people on board. So I think career paths, firms now need to create that pathway in terms of, okay, how do these careers progress by bringing this knowledge and expertise? Where you have accreditation, where people have achieved a certain level of knowledge around ESG matters, they're accredited. And at the same time, creating pathways, not just having financial audit partners, but also assurance leaders, creating that pathway. And I think firms need to create an environment where there's cross-functional knowledge sharing and collaboration. People in financial audit, working closely integrating with people in advisory, working closely and collaborating with people in sustainability. So there is a need to make sure we develop a culture of multidisciplinary teams as we prepare for the future. So ultimately, that's from a talent perspective. Then let's look at the tech. I mean, again, tech has been a bit of a buzzword with so much happening. The big four, the bigger firms, they have started investing quite a lot in technology, building, developing proprietary tools, that link in ESG information with the financial reporting information. So there is that element of building that technology. And I also think even mid-tier firms and middle to large firms entering into strategic partnerships, with ESG platforms, providers, things like Workiva, where you have that access to that information. I mean, looking at the poll there, getting the information is hard. So entering into partnerships where you can access that data is quite important. But then at the same time, that creates some challenges. We're talking about cybersecurity. Now, if you're building interfaces that are pulling in this external information, what does that mean from a data security perspective? Cybersecurity we're talking about. So there is that element of making sure that firms, all the data that you hold, is it secure? Who's got access to it? And we need to encourage innovation. We need to encourage our teams, our staff, to get used to data skills. Develop these data skills, use data analytics, leverage AI towards making sure that we can access that information that we need, and we can analyze that information and bring that linkage between financial reporting and ESG reporting.
Thank you so much, Nyasha. And I think you helped pave way for my last poll question. Because all this time we are talking about all these things coming at us. I want us to take an introspective look inward and ask ourselves, how do we feel about all these changes? Do we feel prepared? So the third question I just want to bring to the poll, the last question, how confident are you that the accounting and assurance profession is evolving fast enough to keep up and stay relevant with the next decade? How confident are you of our ability to keep up? So the question is, are we doing enough to keep up? Are we also doing it fast enough if we are doing something? Again, no right or wrong answers. It's all anonymous. Feel free if you actually want to choose 4. You have no idea what is happening. So how confident are we about all these changes that are happening? Looking inward, feeling how you're feeling as a professional. All these words, all these innovations, all these things we keep talking about. How ready do you feel? Not confident. Ooh. That is a very sobering result. But it's good. We need to talk about these things. This is the place where we actually get to talk about it and address it. How confident are you feeling about how we are prepared to deal with all this that is coming in? Cass, I'm sure you saw what came through from the poll. I know you are in the digital asset space. Looking at our current accounting standards, how future fit do you think they are? Or are we trying to retrofit something that doesn't work in this new reality? What are your thoughts?
Thank you. I think the simple answer is very similar to the poll results. I don't think the current accounting standards are fit for purpose for the next decade. Especially in my line of work, so working with digital assets, cryptocurrency, what I find is we're currently shoehorning current standards to make cryptocurrency kind of transactions work within them, whereas in reality what really should happen is new standards should be in place specifically for new asset classes like digital assets or any other new asset classes that come up. And a kind of good example to give to everyone in this room is typically when a business holds cryptocurrency on their balance sheet, it's held as an intangible asset. And under IFRS, under IAS 38, a business is allowed to kind of not amortize this, and assuming they kind of argue that the digital asset has an indefinite useful life. And in the example I'm using, if a company's holding Bitcoin, you'd argue that they're holding it for investment purposes, they don't want to amortize it. It simply doesn't make sense to amortize Bitcoin, which is all fine with IFRS. But when we start looking at local gaps, this is where we see standards are kind of out of date, even in the UK. So I work with many clients who use FRS 102, a local UK gap. And when they hold Bitcoin, again, same example, they want to hold it for investment, they're expecting it to go up, they don't want to amortize it. But under FRS 102, the rules are you have to amortize an intangible asset. And if you can't kind of figure out what to amortize it over the period, it's capped at 10 years. So it simply doesn't make sense. The standards are out of date. There is a small caveat here. There's a kind of bypass of this, which I use with many of my clients and which they use as well. There's something called the true and fair override, which basically says if in economic reality, amortizing the intangible asset doesn't make sense, you can override it. And this is something we have to do, we're forced to do with companies holding Bitcoin. But the key point here is we're trying to find these caveats and these loopholes to make the economic reality align with the standards. What really should happen is local gaps and kind of international standards should have new standards for new asset classes, namely digital assets, which is kind of where I work. And they should be kind of more aligned to what's going on in reality, instead of us trying to get old standards and shoehorning them into ways that work. And it's aligned to what the poll results said. So I think everyone's kind of aligned that we need some changes.
Thank you so much. And it's pretty interesting because I sit on 2 boards. And as an accountant, I can make sense of some of it. But what advice would you give to board members who are not quite sure how to now move forward in this new era with regards to governance and transparency and what all this means? Some still don't understand. What advice would you give to people?
I think boards in general have to take more responsibility, especially when dealing with kind of new areas which not many people know about, such as digital assets, cryptocurrency. It's the responsibility of the board to really understand the key risks involved. And it's something that I'm seeing happen now, to give credit to the boards. They are realizing that ultimately it's their responsibility to ensure that the risk management processes, the regulatory frameworks are being adhered to. What I found kind of in the last few years was boards were typically kind of giving away the responsibility for cryptocurrency or digital assets to the CFO or a crypto specialist, and were kind of oblivious to the risks. And that's exactly where they don't want to be. And like I said, to give credit to boards, they're now realizing that they need to understand the key risks involved with crypto, especially if a company is holding it. And they need to ensure that they understand the risks and there's sufficient processes in place for this. And those key risks would be counterparty exposure, kind of ensuring where the crypto is held, ensuring it's not too heavily invested in one exchange over the other, kind of wallet procedures and policies, kind of figuring out who has access to the wallets, are they kind of held in-house, self-custody, or are they kind of exported or externally held? So boards need to understand this, and I'm not saying kind of be experts in blockchain and crypto, but understand the key risks and ensure that there's sufficient processes in place.
Thank you. The next fact, this time I didn't cyberstalk. I do work for an insurance regulator in operational risk. I did see that your firm completed the first audit for an insurance company that was entirely denominated in digital currency, Bitcoin, if I'm not mistaken. Can you tell us some of the key things, the unique characteristics of performing an audit of a cryptocurrency environment? What are the challenges that are present that may not be in other types of currencies?
Sure, and that firm was Meanwhile, if anyone wants to have a look at that, but it was pretty interesting. I think when dealing with audits in cryptocurrency, there's a few different nuances you do need to take into account. And I've kind of come from the traditional audit world, so I was at PwC, so I'm pretty well versed with traditional audit kind of methodology. But when you start to look at cryptocurrency, it's a different ballgame altogether. And I'll very quickly summarize the key risks, the first being ownership. So you need to really get comfort that the entity holds the cryptocurrency it says it does. And it's held in various different wallets. So you need to understand the different wallets, the wallet management processes in place, and to get actual comfort that that wallet is theirs. And my firm does this. We've kind of built a self-built tool, a proprietary tool that uses cryptography to send a automated message from the client's wallet to the blockchain, which is accessible by everyone. And it does this without revealing the passkey, which is key, because if you reveal the passkey on the wallets, then they're not really yours. They're whoever has access to the passkey. So I think the key kind of takeaway is we've kind of built our own tools to really understand and really figure out if wallets are owned by the different entities. Another key risk to look at is completeness. And this is actually where blockchain is very useful, because all transactions are available on the blockchain. So anyone in this room can go on any blockchain explorer, type in a wallet address and see every transaction. It's available for everyone to see. And the way we audit this is, again, we've built some tools to kind of extract all this data and figure out what part of this data relates to the entity, to the wallets, and to ensure everything's being accounted for. And kind of the last point, the final key risk would be on valuation. And as many of you probably know, cryptocurrency, the markets are 24/7. So there's live price feeds all year round, every day. So the issue here is trying to extract the data, or ensuring that the data is extracted correctly, the prices, at year end at a certain time, and we use different kind of price feeds that pull this data for us. So the key takeaway is we kind of had to build our own tools and have a key understanding of blockchain. Like I said, you don't have to be an expert. You don't need to understand smart contracts or coding, but you need to understand how they work to then use judgment to figure out which accounting policies you're testing, or kind of what audit documentation you need for that.
Thank you. Thank you so much. Just one final question I'll put to the panel. What can the 2025 CA do that the 2035 CA will thank them for? What can the 2025 CA do that the 2035 CA will thank them for? You can take it in any order as you process.
I'll go. I think the main thing from the research we did is just having a really kind of concerted effort to properly understand AI and properly training the next generation of accountants coming through, to make sure that as a sector you make the most of the opportunity that the next 10 years has. So I think I'd expect in 2035, if it hasn't been adopted, the new generation coming through will look back at 2025's conference and say, why didn't you implement training? So I think, it's just the upskilling, similar to what we heard as well. It's all about training, really, I think.
Yeah, I agree with that. I think ultimately you need to embrace the technology. You need to jump onto the bandwagon. It's not enough anymore just to understand how debits and credits are entered. You need to make sure you are data literate. Use of AI, innovation, technology. Immerse yourself, embed yourself, prepare for the future. It's important that you become multi-skilled. You can't just be confined to a specific area. It's important that the curriculum, what you're preparing yourself for, what you're learning, is being well embraced, well-rounded, to be able to face the challenges ahead and be current and relevant.
I completely agree. And I'll use an example. At my firm, when we're now bringing in the new generation of accountants, the new graduates, we're obviously looking for kind of them being excited about accounting and wanting to learn, but also their kind of IT skills, their programming skills, their interest in software, because I feel like that is the future, to really understand how AI works, but also having skills in programming to be able to apply to various different industries, and especially in my industry, it's key. So that's very important.
Thank you very much. I think this is the one question I was allowed to answer as the moderator. So 2025 auditor, what can 2035 thank you for? They can thank you for creating a brand. Yesterday, we heard William talk about all the numbers of chartered accountants that are coming out. They all know debit and credit. They all know the IFRS and the gap. Your competition, we were told yesterday, is not AI. It is the accountant that knows AI and other things. So what can 2025 auditor thank you for? Is creating a brand. I am Tendai Rukarwa, the penguin speaker. I talk numbers, but I talk life and boldness into professionals. I embody it as I walk. Remember, create a brand, craft it and make it your own. From today's conversation, I hope you've been able to hear that AI, ESG, digital assets, they're not buzzwords, they're not vibes. These are real transformations that are happening, and it's the people in this room, beyond online, the new trainees. We are the engines that are going to drive this through. So the future is not something we're not going to sit and wait passively for. It's something we're going to proactively walk towards by preparing for it. Can you help me in thanking this amazing panel for such an engaging and enlightening conversation? Okay. And one last thank you for yourselves. I can appreciate this was the morning session. You probably had to wake up earlier than you intended. I wore yellow so that even if the conversation was not engaging, I looked like human sunshine. Thank you so much. The polls and your responses added so much depth to the conversation. We've come to the end of our panel discussion. Enjoy the rest of your winter school.